facilitate this webinar. So as Luladai said, we will be discussing today about trade and market intelligence. So let me start by sharing my screen. I hope now you can see my screen. Hope so.
Yes, we can see your screen.
Perfect. Thanks a lot, Luladai. So I don't know how familiar you are with trade and market intelligence, but don't worry. I know the term sounds very fancy, and today we'll be discussing about what is this about and what do we have to offer from ITC specifically in this regard. So in terms of the agenda for today, what I propose is we will just discuss a little bit about this project that you might have heard about, which is called the African Trade Observatory, which, as its name said, it focuses primarily on the African region. Then we will just go through a case study and a live demonstration on the website, since the African Trade Observatory project has an online website where you will be able to navigate and find a lot of information that will be quite useful for you. Then we can just have a quick Q&A session, and finally we will have practical exercises, so you will be able also to test what you have been learning through this webinar. So as we start, I just wanted to highlight some key facts and why is it important to have this information available. So as we all know, trade can be a powerful economic tool, though it underperforms in the African continent in contributing to development. Despite efforts, as you can see on this slide, Africa's share of world trade continues to be undersized. So here, basically, we see that the trade that occurs between African countries is around 15%, or 1 of 10 products that are exported from Africa enters the African continent. And in general, this share of Africa continues to be over-concentrated on natural resources. So as you can see on this slide here, fuel, ores, and basic metals tend to be more capital intensive and less labor intensive to produce. And so they create fewer jobs, and such struggles to contribute to structural transformation or industrialization that is as we know, one of the key objectives in Africa. So as you can see, there are here two specific facts that we have seen. So the intra-African trade is low compared to other regions in the world, continues to be concentrated on a specific natural resources. But the good news is that when African countries, despite being so small, so 15%, when they trade with each other, tends to be on more processed items. So as you can see here, we have two graphs. So the first one, let me try to highlight, use a pointer as well. So the first one talks about intra-African trade, which is this small percentage that we saw before. So it tells us that from these, let's say, 100 products that have been exported into Africa, 52 of them have more value added, are more processed, compared to when African countries trade with the rest of the world that we have seen tends to be on natural resources. And that's why the level of processing is very short. So these are good news, because that shows us that when countries in Africa trade with each other, it's much better than when they trade with the rest of the world. And in addition, they trade more products. So in Africa, as you know, there is a classification. We will talk about that, on how products are being traded and or what we call the language of trade. And we know that for a product to be traded abroad, it needs to have a specific code. So based on this code that we have, which is called the Harmonized System Classification, so we know that when African countries trade with each other, they trade around 1,270 products as of 2023, compared to when they trade with the rest of the world, which is 945 products. So despite being small, it's more processed and it's more diversified. So there are more products that are being traded within the African countries. And then what we have also estimated is that there is a lot of potential for African countries to continue to trade with each other. So we estimate this potential to be around 33 billion by 2028. So there is a lot of opportunities for African countries to continue to increase their presence, specifically in processed products. And that's relevant because, as I know, most of you who are joining us today, you are in the food process industry. So as you can see, there is a lot of opportunities for you to expand into the African continent. So, but these are the great opportunities, but we also know that there are challenges that will need to be addressed when you start to trade within African terms. So, for example, one of the challenges, and we know that this challenge is particularly relevant for micro, small, and medium-sized companies, which, as we know, tend to be owned by women, is access to information. Indeed, there is a calculation that says that access to information on trade in particular, accounts for about 1/3 of the cost of trading with other countries. And in addition, the evidence from the ground, and that's based on a survey that we conducted a few years ago with companies across all Africa, what we found is that companies said one of the challenges, apart from the access to information, and this link to access to information, is that we don't know each other. So for instance, if you can see, for instance, these text or this saying from one of the interviewers, he said, I don't know any African company which supplies the inputs that we will need. So therefore, we know that there are huge aspirations thanks to the AfCFTA agreement, but to be able to talk about value chain development, regional value chain development, and I'm sure most of you are interested as well on those topics because you're processing your own the inputs that you might be gathering from other countries. When you need to be able to understand where those inputs can come from. So these are the responses from some countries, and maybe you might feel related to those. So that's linked to this 1/3 of the cost that we mentioned that relates to the lack of access to information. So before we move to the part on how we plan to address this lack of access to information, I would like to just do a short case study. So, just to understand as well, for instance, what do you think is the necessary information that you require? For instance, when you have tried to export, what kind of information did you need to be able to export to other countries? So this is just a case study. For instance, this company is called Naturex. I'm not very good with names, but this is the name that I have given to this company. And this company was found by a group of friends, and they produce refined sugar, and they have a store in Egypt. So the company aims to expand into the African continent, for instance, to Kenya, Namibia, and Ghana, among other countries. So what kind of information do you think they should get to be able to expand into those countries? So perhaps you can just write on the chat, and I will be looking at the chat, and reading loud out your answers so that we can all look at them and just listen to them. So I will give you maybe 3 minutes so that you can write your answers. So for me also to understand how much do you know about this trade intelligence and information. So what is this information that you need to be able really to trade? Okay, so I don't see any of your answers yet, so I invite you to write answers because the idea of this webinar is not for me to speak, but also for you to react and to be able to be part of this conversation. So someone says, so we have already the product there. As I said, it's the product, refined sugar. What kind of information do you need? You have the company is based in Egypt. So you want to expand into another country. So what kind of information will you require for that purpose?
I don't know if you can see this, Jacqueline, but I have a couple of answers. Size of the market opportunity, market access requirements, who are the buyers, and how do we get in touch with them? These are responses Dorothy has shared. And Virginia responded, the countries that import sugar, the volumes they import, and the importers in the country. I hope you were able to hear that. Yeah.
Perfect. Thanks. No, I couldn't see them, so thanks, Leda. I didn't see those answers.
I have one more, sorry to
No problem.
floor. Actually, two more. Tefo responds, determine if your supply meet the demand. And Milanga responds, need to know about the refined sugar specifications.
Okay, so thank you very much, Luladai, for sharing the answers. So what I see here as well, what I have here is market access conditions, demand. So thanks, I can see that many of you understand also this term on demand specifically, which will basically mean how much this country requires. Like as I'm a consumer, how much can I demand from this product specifically? Then I also understand something related to standards, regulations, the requirements, which is related to also standards and regulations posed by the country. So perfect volume as well, I think, Rula, that you mentioned. So yeah, so here was just basically, also just for you to start setting your mind on what we'll be discussing. So let me just put so here what I have put is just basically all the type of information that we have been conducting a lot of webinars and workshops also as part of my section, and this is kind of information we always receive, right? So we need information about market trends, trade flows, statistics, regulations, tariff rate quota, rules of origin, and so on. So all of you were correct. So we need a lot of information. So sometimes, and there's issues like when we think about trade, it's very simple, right? There is a border, and what we just need to do is move one box to the other border. But sometimes it gets complicated when we need to move that box because there is so many papers that are attached. So there is indeed some people who said that sometimes what move the most are the papers and not the product because it's just one box, but there are 10 papers attached to that. So that's what we will be discussing a little bit in detail. So what kind of information and where I can find this information. So how can businesses then take advantage of this information? How can businesses really can be up to date? So one of the issues that we recommend to address this lack of information in the African region in particular, because we know, as you recall from the previous slides, that it's quite costly for companies not to have access to this information, particularly for MSMEs. And we know that there are many of these companies are run, owned, and managed by women. So there are two things that are important here. The first one relates to about new business opportunities. So read or get this information so you know where the opportunities are lying, and diversify market risk. So one thing we learned from COVID is like you cannot just focus on one market, but you should also think about different market opportunities. So one market, might be closed from one day to another, and if you only were focusing on one, then your opportunities might be really from one day to another, just stop or just be closed. So in that way, what we will do in this short webinar is we will start with this African Trade Observatory online dashboard in particular. And then I will suggest to complement the analysis of what we will be seeing here today, because we will not be looking into all these different tools. You can use other tools from ITC, which is called the ITC Market Analysis Tools, which also provide additional details on different aspects of data, such as global trade flows. You can use trade map, market access map, rules of origin. We will see rules of origin today a little bit. We also have procurement map if you're interested in looking into procurement opportunities. Then EPIN for regulatory requirements if you want to be notified about new changes or regulations from one country to another for your specific product, you can register. And then also global trade help desk. What is important of all of these tools that I'm sharing with you, first is that all of them are free. So you just need to register. You don't need to pay to be able to access this information. And we start with the ATO. Why? Because the ATO is actually an integrated solution. So it combines the information from all these different tools into one platform. So that's why we will be focusing on the ATO today. So, and why is the ATO then important for Africa? So we have seen the information about Africa, what is the status of intra-African trade, but why this initiative is important? So the African Trade Observatory is one of the 5 operational instruments of the AfCFTA that was released, as you can see here on this slide, on the 7th of July 2019, when African heads of states and governments reached the number of signatures, and the agreement was, of course, released with all these operational instruments. As its name says, as an operational instrument, is seen as a key to make the AfCFTA agreement a success. So why is that the case? Because the African Trade Observatory aims at enhancing or revolutionize how data in Africa is being collected, being disseminated, and being used across all Africa. For two specific types of stakeholders. For businesses, because at the end of the day are businesses who will be trading and need access to this information, but not information from the last 2 years. They need information from last year or from last month to be able to make the right decisions and to be able to identify these new opportunities. And on the other side, government officials require also this information to be able to support companies and to be able to make strategies that will help you to benefit from those initiatives. So this African Trade Observatory, it's, as I said, it's one of the 5 operational instruments of the AfCFTA. It is available online since December 2020. We will look at the website, and that's why I said that I suggested that we have this case study. So the ATO is available at ato.africa. That's the website. This initiative is being led by the African Union, implemented by the International Trade Center since 2019. Thanks to the financial contribution from the European Union. So to ensure its objectives of really revolutionizing, transforming how this information is being collected, we have to work with different stakeholders at different levels. So at the continental level, as I mentioned before, we work with the African Union. At the regional level, we work with different regional economic communities. And at the national level, we work with governments, with the Ministry of Trade, with customs authorities, as well as companies who will be benefiting from this information. It's like, for example, just think about the ATO as you preparing a cake, right? So there are different inputs that are required for you to have the right cake. So if you don't put flour, the cake will not really be as high as we want it. So similar with the ATO. So we need to put all the different elements or inputs so we have the right cake or the right information for all of you. Because we cannot give you, let's say, as I said, a cake without sugar because it's missing something. So we cannot give you part of the information without, we cannot tell you, for instance, how much a country is exporting or your country is exporting of this product without telling you which are the regulations you need to enter into this market. So both kind of information that we will be discussing here is present on the ATO. So at the national level, we work with a lot of countries to improve and to have this enhanced data that I was mentioning to you before. So we work with more than 30 countries. As you can see here, this is the years in which countries decided to join the African Trade Observatory. So we have currently 34 countries that are part of this project. And to make the most of it, so we work with different pillars because the idea is to change how data is being collected. So the first part will be, of course, improving the data that is being collected and how often this information is being collected. Then second is to put this information in a way that is accessible. And that's why we have created this online dashboard. Because, imagine we collect tons of information from more than 34 countries from all Africa, but then we just keep the information. So there was no point then for us to collect all this information. So therefore, we make this information available to all of you using this African Trade Observatory online dashboard that we will be seeing in just a few minutes. And then to ensure the sustainability of this initiative, because at the end of the day, it's a project, we work very closely with the African Union. The African Union have created a unit within the African Union, which is called the African Trade Observatory Unit. So there are 5 officials that are working with us to implement this initiative across all Africa. And then, as important, the red color that you see here is capacity building. So we can create the most sophisticated tool, which is for now in all ITC, the African Trade Observatory project is the most sophisticated tool in terms of data that we have. But if no one knows how to use this information, then there was no point to create it. So that's why we do invest a lot on capacity building, on how this, and to show to companies, to government officials, how this information should be used, interpreted, and also disseminated across all channels. So as I said, what we see at the end as an output of this project, of course, will be the platform, and that's what we will be focusing on. And this is how the platform look like. So it is available at ATO.Africa. So we have these three modules, one called Compare, one called Explore, and the other called Monitor. And the first two modules are those that provide us with free trade intelligence, what we call the part of the market analysis, so which is tailored to businesses and to business support institutions, while the monitor module is tailored to government officials. So if you recall in the beginning, I said this initiative caters two groups of stakeholders. First, companies, because you need the data, and you need different data than what governments need. So therefore, it's under monitor where government will find more granular data, perhaps sensitive information as well that they need to be able to put in place strategies. So this platform, as per request of the African Union, is available in 6 African Union languages. And we will be focusing, as I said before, on the Compare and Explore, which is the one that is also free. You don't need to create an account to access it, while if you are a government official, you will need to create an account to access the Monitor module. So in these two modules, Compare and Explore, we will find a lot of information related to international markets as a big group and market access conditions. So related to international markets, we will talk about the demand, as someone mentioned, the size of the market, the share of the market, the trends of the market, the opportunities by talking about the potential or the unrealized potential on that particular market. We'll be talking about partners. So we also have a business directory where you will be able to find already some potential importers that might be interested in your product. And then linked to that is the market access condition that also someone mentioned before. So here we will be talking about how feasible it is for you then to enter into that market. So related to tariffs, to taxes, regulatory requirements, trade agreements, rules of origin, and voluntary standards. That's in a nutshell what we will be seeing as we move forward in this webinar. So how do we then go through it? So what we propose to navigate this entire analysis process is to start with the Compare module. So first the Compare, second the Explore module. In the Compare, let's think about when you want to buy a gift for your kids or for your mother or for your parents, right? So you go to the supermarket and you might find different options, right? You might find a teddy bear, you might find flowers, you might find chocolates. And you will be comparing these three options, right? So you will see whether this is big in terms of the size, in terms of the color, perhaps, because perhaps one of your parents might be interested in one color compared to another. And that's the same thing we will do with the Compare. So we will need to identify first which is this interesting or attractive market for me by looking into specific indicators related to trade and market access conditions, of course, in this case of market analysis. Then when I have identified my gift, let's say I will decide to buy the flowers, then you will need to check in detail whether the flowers, for instance, are very perishable. So for instance, whether they will last for 1 day, 2 days, 3 days, whether they, I don't know, whether it comes with a powder, so something more specific related to this product that you have selected. So the same with the market. So once you have identified from these 3 markets, 5 markets, the one that is the most attractive, then you will narrow it to understand how easy it will be for you to enter into that market. So that's what we will be doing with the Explore module. So Compare first to identify the attractive market, and then Explore to dig deeper and to be able to really assess whether you are ready or not to enter into that market. So this is what we will follow as well in terms of the step. And of course, to be able to go through these different steps, there are different concepts that apply in trade. So within the platform, we will see all of them, actually. So we will see the harmonized system, trade data, information, export potential, tariff, rules of origin, non-tariff measure, taxes, and voluntary standard. So in all these steps that we will be following, you will be seeing all these concepts being applied. From the green box that we see here till the purple one, where you will decide whether this is a good opportunity or not for you. Okay, I don't know if there are any questions. Okay, just because I saw some comments, but okay, perfect. There are no questions. So Now we will go into the case study that I will be presenting to you today, so we can go through the platform now. But before we do that, let me just highlight some concepts that I'm sure you might be familiar with, or perhaps not, but that's the key to be able to start trading. So as you know, there is this system which is called the harmonized system classification, which is also known as the language of trade. So, we speak different languages to be able to know that we are referring to the same thing. That's why the system was created. And the system is updated on a regular basis. So every 5 years, the system is being updated. The last update, the last version is from 2022. And why is it updated? Because we know that new products appear in the market. For example, smartphones, and the code for smartphones was just created in the new classification 2022, which didn't exist for a long period. So when the world sees that there is a product that is being traded or becomes more famous or it's being removed also. If we think about analog cameras, like those cameras, that are quite old that we used to use many years ago. So those cameras has been removed already, or the classification has been aggregated with another because it's no longer being used. So this classification is important because it helps us to understand other technical information, such as rules of origin. So you will see that sometimes rules of origin, which tends to be the most complicated part to understand for most traders, based on the information that we have received and all the surveys that we have conducted across all the world, it's related to something that can be like the chapter, so or the heading or the subheading. So you will see that sometimes in the regulations, it will refer to the chapter have to be different or not within the same chapter, or the heading have to be different. So before we go into the example, I just wanted to highlight that if you didn't know or if you just need a refreshment on these, so the chapter will always refer to the 2 digits. The heading will refer to the 4 digits and the subheading will refer to the 6 digits. So the chapter is like the group, the big group, right? So in this case, for this example, 09 chapter will refer to coffee, tea, mate, and spices. Then the heading will refer to the 4 digits. So we disaggregate further this big group. And 0901 will refer to coffee, 0902 will refer to tea, and 0903 will refer to mate. And then the 6 digits, which is the subheading, and that's the one that we used. So for market analysis purposes, the most disaggregated level, if I want to compare one country to another, will be the 6-digit level. And that's the one that we will be using in our example. Will mean that basically one of these headings will be disaggregated further. So in this case, we will be disaggregating T, so 0902, and therefore there will be 2 digits added at the end. So 090210, green tea, 090230, black tea, and 090240, black tea in bags higher than 3 kilos. And then this is in general what we know as the classification for comparisons between countries. But then there is something called the national tariff line. So in addition to having these, let's say, the most disaggregated levels, there are countries that have decided to add more digits. So for example, if we talk about green tea, there will be a country, in this case, this is the case of China, who have added a 10 at the end, as you can see here, so 090210, to refer to green tea in packages of more than 3 kilos, and then the 90 should be here to refer to packages of green tea of less than 3 kilos. So you can further disaggregate these at the national tariff line level, but we cannot then compare with other countries. So that's why for the comparison purposes, we will look into the 6 digits, so the subheading, but then we want to dig deeper, then we might, for the tariff purposes, we will be looking into the national tariff line because the countries might have further disaggregated your product. For example, if you are interested in organic, they might have a specific code for organic that goes beyond the 6 digits that you had identified before. Okay, so we will look into this example, which is about body lotion from a Kenyan producer perspective. But all the examples that we will have for the practical exercise will be looking into examples of food, of processed food. But since this example is a bit complex, I want to have something where you can see a lot of information. That's why I have selected this example. So as example reads, so that's the case that we'll be looking at. So I'm a Kenyan producer of makeup and skincare preparations. As I said, we will be looking at the subheading level, so the 6-digit of the HS code. Here is a code that I have already provided for you. And my product in particular is body lotions, which is within this specific code. And I would like to expand into the African market. So I'm looking for opportunities, and I'm asking whether there's any suggestions for this purpose. So therefore, I will now change my screen. So I don't know if now you can see my newest screen. I hope so. I hope now you can see that I have changed to the website. I don't know if perhaps you can just confirm by message if you can see it. Okay, can someone confirm so that I know that you are able to see now the website, not the slides? I think yes, because I saw a hand had been raised. So I guess the answer is yes. Okay, so I will continue then, since I have not received any other answer. So in terms of the website, as I said to you, you have to just type ATO.Africa. So here I have typed ATO.Africa, just type it again, ATO.Africa. Yeah. And it will take you to the homepage that I presented to you before. So here, if you recall, I told you there were 3 modules. We will be focusing on the compare and explore. So I told you the platform is available in multiple languages. To change language, you just need to simply click on the language of your preference here. So here is English. You could be able to click to Spanish, French, Arabic, Portuguese, and Swahili. Then, as I mentioned before, we will start with the compare module, in which we will analyze different markets. So here, as you recall, the example was of a Kenyan producer of body lotion. So therefore, the name of the exporter here will be a Kenya as a company, as a country, because I need to select the country from where I'm exporting from. So Kenya. And then here, I have already provided to you the code for the product, but sometimes it happens that you don't know your code. So here we have an option called the HS Finder, where you'll be able to identify your code. So you can click on HS Finder, and it will show to you all the different codes that are available in the harmonized system. So just for your reference, there are around 5,000 codes available, a bit more than 5,000 codes available. If you just want to go category by category, so you will see the first one refers to live animals, and you will need to click on on this one, and then click again on the heading, and it will desegregate it to the subheading level, which is, as you recall, I told you, the most desegregated level that we can have. So in this case, the category will be live animals. 0101 will refer to live horses, asses, mules, and hyenas. And then each one of the 6 digits will refer to a specific animal. So for example, 010130 will refer to asses in particular. So in this case, I already told you the product, but let's say you want to find it as well using keywords. So you can just put makeup here. And here it will present to me all the different codes or different codes that have the word makeup on it. Right, so here I will need to go code by code to understand whether my product is being included or not here. Okay, so here, since I already gave you the code, so it's 33499. I just simply need to enter the code, and I will click on start. So again, if you don't know your product code, you can always click on HS Finder to be able to identify the right code for your product. This is revised on a regular basis. So for instance, I mentioned to you that now the new classification is 2022. And as you know, when you have to go through customs, you need to provide this code to be able to export or import a specific product. So here we are using the 2022 classification, so you can always browse for your product code if you are not aware of it. Okay, so here then I have arrived to the compare module. And as I said to you before, here the idea is to compare, right? To identify the most attractive or the most interesting markets for me. So here, therefore, I have different categories. And if you recall when I said before, when you are going to buy something in a shop, you might have your categories will be the size, will be the price perhaps, or will be the color. So here what we have is categories related to trade and related to market access. So again, here, just to highlight, we are a Kenyan producer of this product, which is body lotion. And this company is looking for opportunities in the African market. So I will go slow here on explaining what you see on the table here. I hope everything is okay, because if you don't have an issue, you can always raise your hand, since I cannot see any comments or questions posed. Yes, I think there is a question for the Temitop. Sorry for the pronunciation. I think you can unmute yourself.
Okay. Hi.
Hi.
Thank you for the section so far. My name is Temitope Olawumi from Nigeria. So I came in late and I'm trying to figure out what you've said so far, and also trying to navigate the screen, what you have shown on the screen. Yeah, so I don't know if it's possible. Is there going to be a recording, or can you
Yes.
please kind of
The session is being recorded, and I just started with the live demonstration. So you can check for the recording, you will be able just to see the presentation of the project. So I'm just starting with the, let's say, the relevant part, which is demonstrating the type of information we have available on the African Tree Observatory dashboard. So you're safe, no worries. Okay, so is there any other question, comment? Okay, perfect. So I don't see any other comments. Okay, perfect. So as I said, so here as a case study, we are just looking at a product. You can change, of course, and look for your product, but here we are just giving an example for all. And I have, of course, I have selected an example, which is that you will notice I have a lot of information so that we can really understand all the different type of information that is available on the platform. Okay, so here, the first thing that they will tell me is that the results are filtered. So what I see here on the table below, it's based on these buttons here. So here it's telling me that the results are filtered by the untapped potential. If you recall, I told you there are many concepts that we need to understand from this, but let me just put it in a simple word. Untapped potential or unrealized potential will mean how much more based on data, because here is all based on data. So it's not like, what you're guessing, like based on what your friend told you, what your neighbor told you here. All the information you will see here is evidence based on statistics. So what we have done is we have used a lot of information. So we have used information about how much is your country or how much your country can supply. So one can, for instance, export to another country, how much the other country can import, or how much the other country will demand, and how easy it will be for these two countries to trade together. And with that, we have come out with a ranking on how much more you can export to those countries, in this case, by 2028. So we have done the work of compiling all the information together for you. We have used an econometric model for that. And the results we see here are basically the most attractive markets based on how much more we see, based on this demand, based on this offer, and based on how easy it will be for these two countries to trade together. So this is why you see here the 5 markets that are listed here. And here is also telling me that we are only seeing the top 5 countries, right? So what if you are interested in seeing more countries? So you simply just need to use the sliding bar, and it will just show you more countries based on these results. Now, what if you don't want to use the untapped potential? So you say, I just want to use the actual trade. So I just want to know how much, I just want to rank countries based on how much is this country importing from this country, from Kenya, for this particular product. So if you want to do that, sorry, I think I need to refresh my computer. Let me just go through here. Okay, the same one is safe. So I can also just filter, as I said, the countries based on the how much are they importing, basically already from this product. So you will see, therefore, that the countries will change. So before, when I look at untapped potential, I had Uganda first, then Rwanda, then Malawi, then Mozambique, and then Zambia. So if I mouse over on each of these bars, it will tell me this is the ranking that we also see on this table. And in addition, it will tell me the value. So it will tell me how much we have computed that a Kenyan producer of body lotion can enter into this specific market for this particular product. So all analysis here is at the product level, at the most disaggregated product level, what you will see here. So these are the 5 countries. As I said, you can always add more countries if you want to this table, but let's keep it for now with 5. And actual trade, basically, as I said, will change the countries. No, first we had Uganda, Rwanda, Malawi, Mozambique, and Zambia. And now we have Uganda, Tanzania, Rwanda, South Sudan, and Burundi. So we can see the countries have changed. So, and you will ask, why is it interesting then to keep the untapped potential? Because you will see that there are countries where there is no data available. For instance, in Mozambique, we don't have yet information for the latest year, so from 2023. But we know, based on the data we have collected from the last 5 years, that there is a lot of potential in this country. So, and there are also countries with low values. You will see that will not appear if you go through the ranking of the countries that are already importing the most. So by looking into that, you're looking at opportunities that otherwise might disappear if you have not taken into account other variables. So we have done the job for you to take into account all the variables. And that's why we believe that this untapped potential or unrealized potential is an interesting way to look at the markets. The second part, or the second column here, will basically tell us the market imports. So how big is this market? So if you're having a huge production, let's say, of refined sugar, so therefore you will not be targeting perhaps a small market, you will be targeting a big market. So the market import will tell us how big is this market in terms of import. So in this case, will tell us that Uganda is a big market. They're importing a lot in 2023 compared to Malawi, which is importing 4.43. So this country really, if you are interested in a big market, so therefore, for instance, you might go to Uganda, which is a big market. Then you have the ease of trade, which will tell us based on the trading information. So how much are you trading with these countries? Which products are you being traded in the last, let's say, 5 years? It will tell us how easy it is for these 2 countries to trade with each other. So in this case, you will see if the bar is more blue, so it becomes blue. The bluer it is, the easier it will be for you to trade with this country. So therefore, it will be easier for a Kenyan producer to trade with Uganda, to trade with Rwanda, than perhaps to trade with Zambia. So that's based on trading relationship, how much we have been trading products with each other. And then the market access will basically be what we call the tariffs, right? So if you recall, there is this concept of tariffs. So the product can enter to other countries. So this is the border, but they need to pay, first of all, the tariff or a tax to be able to enter into the country. So that's the first layer of cost that they need to pay to get into the other market. In this case, the MFN is a tariff, if you recall, that is applied by all members of the WTO or the World Trade Organization. And that tariff, might be applied to Kenya, to Uganda, to Rwanda. And the effectively applied tariffs, sometimes we know that countries like to put agreements among them, so to facilitate trade. And therefore, the effectively applied tariffs tend to be lower than the standard one. So one will be the standard, which is the MFN tariff, and the effectively applied tariff will be the preferential tariff if you want to put it into a different way. So this will be the preferential tariff, and you will see here in all cases except for Mozambique, a Kenyan producer of body lotion will have a preferential tariff in all markets, in this case, in these 5 markets except for Mozambique. So probably Kenya has an agreement. Of course, we know that that's the case, but let's say without just looking at the data, we will know that Kenya has an agreement with Uganda, with Rwanda, with Malawi, and with Zambia, and that's why the preferential tariff is 0. What else can we see? So based on that, the idea will be to select a market that I think will be interesting. Something perhaps that I forgot to mention is the arrows that you see here. So next to actual trade, you will see some arrows, green, red, and even the color of some countries will change. So the green will mean basically that this country in the last 5 years has been importing more of this product, of this particular product in this case, right? Because we are discussing about body lotions from Kenya. In this case, Rwanda is the same, but in the case of Malawi, it's telling me that this country is importing less. That's why the downward arrow. So, and the red color here, if we just mouse over, it will tell me that refers to mirror data. So basically, sometimes that's a very statistical term. You just need to know that we were able to compile the data based on the other country information. So this is not data that was received specifically by Rwanda, but we have computed this number based on the data that we have received from Kenya. Okay. So based on this information, the idea is to select one country that you believe is interesting. For example, as I said, of course, you are the trader, you have the mind to select. In my case, I could say, for instance, I will select the market that is big, that is with who I can trade easily, where I have a preference to enter into, and a market that is growing, so that they're importing a lot of this product from my country. So that say, in this case, I can select Uganda, because that's the country that has the largest number of imports. It's easy to trade between Kenya and Uganda. They are importing in the last 5 years, so the imports have increased from this product, and it has a preference to trade with this country. Okay, so let me just refresh my screen to go into the Explore module. But that said, here, as you can see here on the last column, there is information that talks to me and it says, this is for more details, go to the Explore module. If you recall, I told you to get deeper, to understand better whether I can enter, if it's feasible for me to enter in or not into this market. Then you can zoom lenses here. So if you click here, it will take you to the Explore module. For strange reason, my internet is a bit slow. Let me just, let me for now stop my video to make it a bit faster. In the meantime, if you have any questions, please feel free to ask them. I'm just refreshing my screen. I think I have too many screens open. Okay, I don't see any questions.
Hi, Jacqueline. We have a question from Virginia.
Okay. I don't see any questions. That's why. Okay, is it on the chat or?
Can I read it out to you? Sorry.
Yes, sure.
Okay. The one I see is from TEFL. I don't see one from Virginia, but it says, is there synergy between HS and AfCFTA? If there is, can I participate in capacity building training by engaging people in my country, and how to utilize this platform?
Sorry, I didn't understand, but is there a synergy between?
Is there a synergy between HS and AfCFTA? And I think she's saying whether or not the HS code on the rules of origin apply for the AfCFTA. And do correct me if I'm wrong, Tefo. And if there is, can I participate in capacity building trainings by engaging people in my country on how to utilize this platform?
Okay.
This is the only hand I see up.
Okay.
But there is one more hand.
Mm-hmm.
Can't see whose hand it is. Two hands, actually.
May I ask my question? My name is Virginia, please.
Mm-hmm.
Yes,
sure.
Okay, good afternoon. Yes, looking at the platform, it would appear that only countries from like East Africa are being shown. I'm wondering, what about West African countries, and specifically Nigeria? Is Nigeria not a party to this trade observatory thing? Thank you.
Thank you, Virginia. I think These are two different questions. First, this is the data. So we are just looking at one example. All countries are on the database. To showing 55 countries, you will see that Nigeria appears here. It's just that for this example, Nigeria might not be the most attractive market for this particular product. So when we do the exercise, you will see that there is one that refers to West Africa. So that's why here is East Africa, because based on this case study, only for this case study, these are the markets that show for this example. But of course, if we look at other examples from Nigeria, then you will see other kind of products that are being advertised. But yeah, so that's why Nigeria is part of the project. Actually, they joined in 2020.
Okay, thank you so much.
You're welcome, no problem.
Sorry, Jacqueline, I don't know if you want to respond to the chat question that I read out, or if you want to give the floor to Edith, also has her hands up.
Yeah, perhaps I can respond in case they are related. So the AfCFTA and the question about the HS. So these are two different also, let's call parts of trade, right? So the AfCFTA is one agreement. There are more than 364 agreements in the world. The HS classification is a language of trade. It's a standard way of coding products. So for instance, 33499 will refer specifically here to body lotions, right? As I mentioned before. But the AfCFTA as an agreement will use the HS classification. So it's not that it replaces or they're linked. They're linked because all trade agreements will make use of this classification to be able to enforce the rules. Someone mentioned about the rules of origin. We will look that into detail, but these are linked to the concept of market access, tariff, rules of origin. So here, what I just wanted to emphasize is like HS is the language of trade, the code, basically. And the agreement, the AfCFTA, needs to use that code to be able to continue the trade. To say that a banana is a banana, they will have a code. Whether is the AfCFTA agreement, whether is the COMESA agreement, whether is the EAC agreement, all of them will need to use the same code. Okay, so I hope I answered also the question. And
should I go next?
Yes.
Yes, so I asked whether this platform offers metrics on trade system volatility and whether it also assesses risks in the market.
Yeah, so trade system volatility is completely different to market intelligence. This is a composed, so the volatility and the risk assessment will build on the trade statistics. So to compile whether this is a risky market or no risky market. So this is more on the competitiveness side. So this one and this platform, as I explained before, focuses on market trade information, which will help you to know as well whether the market is volatile. I will explain you in the next part how you will see whether this market is volatile or no by looking at the trends, for instance, of how imports are going up or down in a specific market. In terms of risk assessment, that will combine other information. So not only trade, you will need to know the political stability of the country. You will need to know about the infrastructure of the country, but that's not necessarily in this platform. This is about market access conditions, tariff, rules of origin. It will be about volumes of trade. It will be about market imports in general, how big is the market, the demand, but it will not include this political stability, that will require to really measure the market risk assessment.
Thank you.
Okay, so if there are no more questions, perhaps I can continue with the presentation. I don't see any other hands raised. Okay, perfect. So as I was saying, and since now my computer also, my website had to refresh. So we have looked into different markets for a Kenyan producer of beauty or makeup preparations. And I specifically for the product body lotion, let's say. And we have looked at different information that we can help us to compare how attractive or not is in market. And based on that, I have told you I will select as an example, each one will have the criteria, right? If my criteria is I want a market that is growing, I will select Uganda and Rwanda. If my criteria is I want a big market, probably I will go for the first two, Uganda and Rwanda. If my criteria is I want a market that gives me a preference because there is an agreement between the two countries, whether it's the AfCFTA, whether it's ECOMESA, whether it's ECOWAS, whether it's CEMAC or SACU or other agreement, then I will select, for instance, Uganda, Rwanda, Malawi, and Zambia to analyze further. So here is just the first layer of analysis. I'm just saying this is bigger, this gives me preference, and therefore I will select this market. And now I need to understand whether I can really, it's feasible for me or not to get into that particular market. So to do that, I said we need to go to the Explore module. Here we can go to the Explore module through more just by clicking on the last column, more details. The second option is to go through the Explore module from the home page. So let me just go quickly. Hopefully it should work well without problems. So here we also have the Explore module. So in this case, I will need to put Kenya. I will need to put Uganda because I have identified Uganda as an attractive market and my product code. So I can do this, or since I'm here from the compare module, I'll just need to click on the lenses to get to the same page. So here now we are in the Explore module. So to assess, is it really an interesting market for me? Can I really get into this market? Can I really benefit from this preference of 0%? And here I will have 3 tabs. So I have the market opportunities, the market conditions, and the business contact. So market opportunities, again, it will tell me more information about trade statistics, export, import, shares, volumes, growth, trends. So here it will tell me, again, I'm interested, I have pre-selected, let's say, the Ugandan market. And then first, it gives me the market share. So it's telling me how well are products accepted, Kenyan products accepted in Ugandan markets. So here it says it's about 42%. So this means that 100, let's say, Uganda has imported 100 body lotions. And from these 100, 42 of them, 43, will come from Kenya. That's what it tells us. In this case, if we just mouse over to the second layer, it will just tell us about Africa. So if Africa imported 100 body lotions, 1.55 or 2 of these body lotions came from Kenya, and the rest will be in the world, at the world level. So here we'll see, of course, the national level will be higher, the regional will be smaller, and then at the world level is also, of course, smaller. Then in terms of the potential, if you recall, I told you the potential will tell us how much more I can actually export of this product into this particular market. So it tells us there is about 1 million that we have computed that can be entered into the Ugandan market from Kenya for this particular product by 2028, which is not a bad number if you think about it, $1 million. And then the import growth, if you recall, in the compare, we were only able to see the arrow pointing up. Here is telling me the value. So here is telling me it's 16% growth, what is actually increasing in the last 5 years. If I want to see the details, so what someone mentioned about the volatility, so I want to see how these imports have been going or fluctuating in the last 5 years, I just go to the import value graph, and I will see here the information from 2014 to 2023. And here in the last 5 years is where we have computed the import growth, 2019 to 2023. But we can see that, for instance, in 2022 to 2023 has been a big increase and is peaking. So meaning that there is a good acceptance of these Kenyan products into the Ugandan market, for instance. So we don't see that it's volatile because it's not going up and down, but we can see here a peak in this case. In terms of market conditions, if you recall here, we're talking about tariffs, we are talking about taxes, we are talking about regulations, we are talking about private standards. So here we can see the tariff first for this particular product. So it's telling me that the standard tariff, the one that applies to all countries, will be 35%. But then I have 2 agreements. So these 2 countries are part of 2 agreements. 2 agreements, they have a 0% tariff. I have the information for both agreements. So I have the EAC and I will have the COMESA agreement. And in addition, as AfCFTA gets implemented, we will be adding, for instance, For this case, the AfCFTA agreement. So you will have 3 agreements to compare and to define whether you can get or benefit from this 0%. If you know this 0% doesn't come automatically, and that's when it comes this concept of rules of origin. So you need to fulfill the rules of origin to be able to benefit from this 0%, because the standard is 35%, which is quite high tariff for any other country that is not part of the agreement, and that could benefit from 0%. But also it might not be cheap for me, right? Depending on how I'm producing my product, I will need to understand the rules to call my body lotion a Kenyan body lotion. So here we have the rules for each agreement. So the first one is called, here are where the acronyms start. Here you will see the glossary. So CTH is change of tariff heading. ALW will mean allowance of 20%, and RVC will be regional value content, which is here. And here we will describe for you the rules. So manufacture from materials of any heading except of the product. If you recall, the word heading is what I was mentioning to you about the harmonized system classification. I told you sometimes those terms might come when we talk about rules of origin. So the chapter, if you recall, was the 2 digits, then the heading was the 4 digits, and then the subheading, which is the one that we are seeing here, is the 6 digit. So that will help us to interpret this information. And this is for the EAC agreement. Then for the COMES agreement, I see that the rules of origin is completely different. So despite being benefiting from 2 agreements, and when we have the AfCFTA agreement, it might even be different. So you will need to compile your own information to see, based on your inputs, whether you can comply or not with these rules. So in addition to that, let me just give you an example here. So we have created with something which is called the Rules of Origin Facilitator that will further disaggregate this information for you on rules of origin. So if you click here, it will take you basically to this website that I have already open. But let it load. Okay. So this is for the EAC agreement. So for each agreement, we have created explanation or further information what it means. For example, if you need a certificate of origin, we are asking you whether you need it for, there is a threshold. So in this case, it says that if the volume or the value is less than $500, then you don't need a certificate of origin, right? Because it's not written here. Here it doesn't tell me whether I need a certificate of origin. So I should assume that I need it. But if you go here for more details, it will tell us that actually you don't need it if it's less than $500. Then it will tell you that once you emit or issue a certificate of origin, that the validity of this certificate of origin is 6 months. It will also tell you whether the packaging, for instance, of these body lotions or the container, for example, in this case, will be included on the computation of the rules of origin. Here it tells me, yes, it's included. Or it will tell me whether if I go to an exhibition and I sell my products, whether it can be entered to another country as a Kenyan body lotion. In this case, it tells me no, it cannot be entered because under the exhibition rule, it's not included in the agreement. So this is just to give you an idea of what else information we can see in terms of the certificate of origin. If you want to read more, you can find it, of course, here in details. And then to explain this one a little bit more, I actually have created an example on the PowerPoint. So let me go through that. Because as you saw, the conditions or the rules, let me just go through. And let me just put it somehow, maybe let's try to put it here. No, I will just put it later. Are different, if you recall, from one agreement and another agreement, right? And there's a lot of information. Let me maybe just go back to this one because you might not be able to see it later.
I'm so sorry, Jacqueline. Can I?
Yes.
There's a question on the floor.
Mm-hmm.
Marie asks, as the president of the African Women Network of AfCFTA, I'd like to know if our network can apply for a training session on rules of origin.
Well, we don't provide per se training sessions. We do webinars on demand. So If you want any, I mean, I don't know if SheTrace provide that information or these trainings. That's something that my colleagues from SheTrace can answer. But under the ATO project and based on these specific components on all the concepts, we do provide webinars on demand for free. Just need to write to me after.
Thank you.
Perfect. So as I was mentioned, for each agreement, we will have this explanation, right? So we'll talk about, let me just read it. It might be easier as we move forward. So the manufacturer from materials of any heading, if you recall, except that of the product. So if you recall, the product heading is 3304. The heading is the first 4 digits, the subheading is the 6 digits, and the chapter is the 2 digits. And then, however, materials of the same heading as a product might be used, provided that their value does not exceed 20% of the X work price. So here is I'm just reading what the information that is written on the website. And this is from the agreement itself. So the AfCFTA will have their own rules of origin for this particular case. But I just wanted to highlight some words here. X work price. So what is this information now comes from? So you told me about the classification, the HS classification. Now you're mentioning something called X work price. So what is that? So that's coming from what we call Incoterms. And I will quickly explain you using the slides, what is that before we move. This is the most, let's say, technical part of the presentation. The others will be much easier for you. But just wanted to highlight and really want you to understand how you can use this information. So here you will see it's even longer, the information that is produced here. And again, we will have this information at X factory cost. What is that? And you will have the CIF value as well. So all these costs or values will refer to what we know as Incoterms. So now let me go to the slides because I have prepared something for you there that might help you a little bit to understand. So the Incoterms. So the Incoterms are international commercial terms issued by the International Chamber of Commerce, which is called ICC, to help traders communicate the task, the cost, and the risk in delivering goods. They determine the cost responsibility, the risk transfer, and shipment responsibilities. So for instance, when you are negotiating an international contract, let's say between Kenya and Uganda, you will need to tell them, I will just pay the responsibility until the box is outside of my shop. And after, you will need to include the transport, you will need to include all the transport from your shop to the port or to the border, then from the border to the shop of the other company. If you're selling to a company, so that's what we call as Incoterms in terms of prices. And in the rules of origin, if you recall, there were some information or some terms as X world price, which refers to this one, which basically will tell me the price of my body lotion outside of my shop. So that's basically the X world price or X factory price, which was mentioned in these rules of origin. The CIF price, if you can see here in the example, will basically mean if my box was here, let's imagine was X work, when the box gets into the truck to be transported, if it fits until the truck, so until the transport to the port, then I will charge the transport, right, of this box to the port, and that I will call it FCA price. When it crosses in a ship, in this case, it will be called FOB price. If it arrives to the other border, it will be called CIF price. So it's basically the price of my box, including all these components, the transport from my shop to the border, from the boat, and the insurance and freight. Because usually when you transport, you will pay an insurance in case, the boat sinks or something. So you will pay an insurance and the transportation cost. And that's why it's called CIF price. And this is all the different combinations. And that's why I'm saying when you need to understand trade, sometimes there are some key concepts that I listed on this slide. One of them also relates to Incoterms because it will help you to really understand the rules of origin. So if I want to give you a very practical example of, and the most known Incoterms that you will use on rules of origins will be the export price. So basically the price outside of your shop, the FOB, So before it gets into the boat, let's say to be transported, or before it gets into the truck to be transported from one country to another, and the CIF when it has arrived to the other border. So that will be the 3 types of costs that we will get. And then if you want to go to a very simple example, so let's say I want to now understand really how I can comply with these rules of origin. And I have listed all my raw materials. So I'm preparing my body lotion, and I have listed all the inputs for my body lotion. So I have used organic argan oil, I have used jojoba oil, chia butter, labels and packaging boxes, plastic bottles. And for each one of them, I need to provide my HS code. So for organic oil, it's 3030-129. For jojoba oil, the same. For chia butter, for labels and packaging, and for plastic bottles. Then I need to tell where are they coming from. So in this case, the organic oil, argan oil is from Egypt, jojoba oil is from Kenya, the chia butter is from Uganda. So even those that are local, so in this case, if you recall, this is a Kenyan producer. So I just need to list the origin. So I know which ones come from my country and which one does not come from my country. And then the plastic bottles come from China. Then I've also listed the cost. As I said, this is an estimated. I'm not sure this is reflecting really the real cost. This is a disclaimer here, but just as an example. So the X work price in this case, so X work, if you recall, was just the price outside of my shop, right? How much it costs outside of the shop, this box. So it will be 4,500, 2,700 for each one of these items, for each one of the inputs that I have used in preparing my body lotion. And the value of CIF, of course, will include the extra because I have transported it. You recall, CIF is when it has transported from here, from my shop, till crossing the border, whether it's sea, whether it's transport, whether it's plane, that's crossed the border. And that's why there is an extra cost. And of course, the cost between this one and that one, you will see there is a difference because we have had to include an additional cost. Then this is the total cost, this is the total cost. How does it work then? So I have 2 agreements, the EAC agreement and I have the COMES agreement. So let's go one by one. So the EAC agreement, the first condition was manufacturing from materials of any heading except of the product. Of any heading except of the product. You recall the product code is 330499, like the chia butter, same product code. If I just read this part, it will be no, because there is one product that I have used, which is chia butter, that have the same heading because it's 3304. So therefore, I will not be able to comply with this rule. But then in the rule, there is also a provision that says there is an allowance of up to 20% of the export price. So there is a limit. There is an extra threshold that they are giving me of this rule that was created. So therefore, if I compute it, it will be the 2,250, which is the same product or the same input that has the same code as my body lotion, which is 3304.99, divided by 2,000 by the total cost, which is 12,600 X work, and that's 18%. So I am below the allowance of which is 20%. So therefore, I can comply with this rule. So I just give you a very basic example how you can calculate it for your own products. The second condition was the value of the non-originating materials. So which are the non-originating materials? So if I'm from Kenya, I'm transporting to Uganda, in theory, the non-originating material for me will start with Egypt, Uganda, and China. And it says that this should not exceed 70% of the export price of the product. So, but then you told me, but you have put only here two costs, which is the plastic bottles, and you have put the organic oil from Egypt. Yes, and it's because these 2 countries are in part of the agreement. So if the product or let's say the chia butter comes from Uganda, I will not count it. It will be counted as a national product from Kenya. So therefore, I only need to take into account the plastic bottles that are not part of the agreement. Now remember, Kenya and Uganda are part of this agreement. Egypt, because it is an EAC agreement and Egypt is not part of the EAC agreement. And that's it. So we need to sum 1,800 here plus 4,500, and that divided by the 2,600, which represents 50% of the export price. So therefore, I comply with this rule. So under the EAC agreement, if this is my table, I actually can go for one or the other. I don't need to comply with all the rules because the rules of origin, if you remember, was A, B, C. I just need to comply with one of them. In this case, for EAC, I can actually go for both of them. If I go for, COMESA. For COMESA agreement, there were 4 rules. But remember, both were giving me 0%, right? So I just need to comply with one. Whether it's EAC or COMESA, one is enough. For COMESA, I have listed all of them to make it easier. So the first one was wholly produced. That's not true because there are elements that come from other countries like China. So it's not wholly produced, so that's an X, no. Then it says manufactured from materials classified in a heading other than of the product. Here we had similar, this one. But here I don't have an allowance in the COMESA agreement. So therefore it's no, because if you recall, we said the Chia batteries under the same code. And here I don't have any allowance or threshold that allows me to actually incorporate any product. The CIF value. The CIF value, you recall, was when you cross the border and you have paid the insurance and the freight for the transportation. And here the value is 14%. So it does not exceed 60% of the total cost of the materials. So the total cost of the materials, you will tell me why you have only included 2,000. Because in this case, Egypt, Kenya, Uganda are part of the COMESA agreement. So therefore, the only non-originating material outside of the agreement will be the ones from China, so the plastic bottles. So this one divided by 14,000 will be 14%, and the CIF value or the rule was does not exceed 60%, so I comply with that. And then the last one, it talks about the value added accounts for at least 35% of the ex-factory cost. So that's for sure because here it just says 35%. So the only non-originating material was this one of China, which is 2,000. So therefore it will go above the 35% of value added. Therefore I comply. So yeah, so this is, for instance, how you will do it. You just need to list all your different inputs. No, as you saw here, I have prepared my table with my raw materials. So I've listed all my raw materials that I have used. Then for each one, I have put my HS code, my origin, my value in CIF, and then I have complied for each agreement. So if, for instance, the AfCFTA agreement comes here, I will need to add another agreement. And you just need to comply with one. So you don't need to do it for all the agreements here. So let me move forward here with the presentation. So here we have done tariffs, rules of origin, the rules, if you recall. So all of that says here, I have put it in that table that I presented to you in the PowerPoint, and we will also be sharing it. So if you have any questions, please feel free also to write to me after. And then we have the taxes. So in addition to the tariffs, as you know, this is the first layer. The country may also put some additional taxes that you need to fulfill when this product enters, in this case, into the Ugandan territory. So you may have 0% and you comply with the rules, but then you have to pay, and these other taxes are not subject to an agreement. So this one, the excise duty, because this is considered a luxury product, and the value-added tax. So even if you get the 0%, you will still need to pay the 28% because this is a tax, the domestic tax. That's not related to the tariff that we were discussing. So what countries negotiate in the agreement, in the AfCFTA agreement, will be tariffs. That's what they are negotiating, to reduce the tariff, to reduce this tariff that is here, the MFN. But they are not negotiating, at least not in all agreements. Sometimes they might have some agreements between them, but they are not negotiating the taxes and other fees that might apply. So that just to be clear. So what we are trying to do is providing you all the information on the cost that you might face. So it's not only about the tariffs, but it's also about domestic taxes, like excise duties, like a statistical tax, like the tax for the Chamber of Commerce that might be even 1% that might be charged. when the product enters into the country. And then you mentioned about the regulatory requirements. So here we also have information. So we tell you what type of regulatory requirement, and then the description of each of the laws. And then if you want, you can also see the source if you are interested. Then we also provide you with the regulatory information. So you know that tariffs tend not to change as much as regulations. So for instance, if there is a new regulation related to labels or packaging, the countries will notify the World Trade Organization. So nothing that was listed here was not notified before. So in this case, we have this website, which is called ePing Alert, where you can register as well and get the notifications for your product. So as soon as the country notifies any changes, you will receive an email telling you that there will be a potential changes, let's say for your refined sugar or for your soups and broth, concentrate food preparations. If you register, then you will get information as well as soon as it's notified by the country who is intending to do any changes. So we have the sanitary and phytosanitary changes and technical barriers to trade. So here you have a lot of information on the last changes that were applying. In this case, it relates to sampling and tested methods for deodorants and anti-respirants. So what I want to say is this information is available. So it's not that it's hidden, it's not that you cannot access it. So you can be aware, if you recall, or I told you, stay alert of new changes that might happen in your product. So this is available at WTO, and you can also access it through here. So if, as I said again, so if you want to see this website, you just need to register, get a notification, put your product, your HS code, and you will get the notifications in real time when the countries have notified them. And finally, we will have the voluntary standards. So we know that in addition to having those regulations by government, nowadays consumers are more and more aware of those voluntary standards on how these products are being made, whether they are making in a sustainable manner, in an organic manner. So if you want, or that's your aim, we also have listed the standards that are applicable to this product, which is in this case body lotion, available. So you can see there are many standards you can also take into account if you, for instance, are interested. For each standard, we provide you a small explanation of what is the standard about, since when it was advertised or available, as you can see here. And then finally, we have the business context. So in the business context information, this is from the Kenyan perspective, right? So the first two will be from in this case, I'm the exporter from Kenya. So this is banks in Kenya that can provide me with a letter of credit. So, or they perhaps can provide any kind of support for exporters and importers. So this is information for all the banks that we have. Then institutions that can help me from the government or private sector, like chambers of commerce or the trade support institution or export promotion agencies. So here we also list them for you, information about those institutions. And then we have what we call the business directory. And this is from the Ugandan side, so from this country here that I have pre-selected, right? So here we have, and this is linked to one of our tools, which is called Trade Map. And here we will have information about importers, potential importers of this product, so that I can not only identify the market, I understand the rules, but also potentially contact already a company that might be interested on my product. So to click, I just need to click on access here. And it will take me, in this case, to the website, which is called Trade Map. So be careful here, because in this case, when you click on access, in my case, I have an account on Trade Map. So as you see, my name is here and it takes me directly to my account. If you don't have an account, it will take you, let me just show you how it will look like. It will take you to this page. And you will say, but this is not the same. No, because you need to have a registered account for this tool, for this website. It's not paid. It's just, you just need to register, and it doesn't take too long. You just need to log in, register, and you just need to fulfill the information that is shown here. That's all. It's just 5 minutes, no more registration, and you will be able to see the information that I'm seeing here. So here, for example, let's say I have 84 companies for the first category. And why it's not on the website? Because we always get this question. It's not on the website because this information is sourced by two companies, consulting companies. So we ITC pay to get that information, which is Down Bradstreet and Compass. So because we pay, we are only allowed to use it on one of our websites. And that's why, because this is an integrated solution, so have a little bit of all the websites, that's why it's linked to this website. But only if you have an account. So that's why you will see you have this company, for example. And for each company, you will have the name, the city, a phone number, and then the name of the contact, for example, and sometimes even the size of the company. So you can see whether it's a small company, a big company, or a large company. So as you can see, most of the companies here in this case are in Kampala. So you can go through that website as well to be able to identify potential importers even for your product. So, okay, so that said, let me just go back and just to show you something on the homepage. We also have, so in case you want to repeat, right? So perhaps this half an hour was not, you just want to see again how to go through, navigate and put your product. So here we have 2 video tutorials. Each one lasts 7 minutes, and it will tell you basically what I have done, going through each one of the compare module, the explore module for a product actually from Nigeria. So you will be able also to go step by step on how to find this information. Okay, so that said, I hope so far it's interesting for you what I'm saying. So the idea, of course, of this website is that we have trying to give you as much information as is possible and is available, so that you focus, not on finding information, because sometimes you need to look for 5 websites to get the same information. But we are trying to summarize it in a way that can be easy to understand and faster for you. Then, so this website always being updated, and we always try to improve on the information that we have. So we are going to include information in the near months on trading services, more taxes, more fees information, because we are collecting this information. And also something that perhaps will be very interesting, since someone mentioned about the rules of origin. So we are creating, and that will be available early next year, a rules of origin self-assessment tool. So you will need just to enter the information. Like I have created this table and show it to you, and we will tell you in the system whether you can comply or not with the rules of origin. So that's something that is coming. It's the first that we are creating, so it will be created for this project, but we have not created it. So it's a completely new feature that will be added and has not been created before in ITC. And as I said, it will help you with the compliance and understanding all these rules that I was showing to you today. And we are also having an e-learning course that will be released, as I said, free of charge, so you don't have to pay. So you just need to enter to the website and probably just register to see the course, that's all. And will last around 3 hours, and we'll go through all these concepts of trade. So if you recall, I mentioned there are around 8 concepts that you need to understand. So we will go example by example on each one of these concepts. So this will be available on the website. So that's it.